Hello and welcome to the latest edition of Talking Bull. I'm Joe Neighbour from Signal Centre. Just me today. Steve's still away on holiday and Jamie can't make it this morning. So just me going through a few charts and the latest headlines to try and set you up for the day ahead. Okay, so let's take a look first of all at the headlines before we get stuck into the charts and have a look at what's going on from the price action perspective. First up, the US housing slowdown was noted yesterday. The housing index dipped sharply to 55 for July from a previous 67 number, which was well below the consensus forecast of 66 and also the lowest reading since May 2020. The Fed have noted the housing sector slowdown and have commented on the importance of the housing sector for calibrating their interest rate decision and the degree of monetary tightening required. The weaker than expected NAHB data was another important factor, dampening expectations of more aggressive Fed hikes later this month. In terms of the rate expectations themselves, they drifted lower given the notable focus on inflation expectations in the policymaking decision. There were initially fears over a 100 basis point hike this month. However, that has faded after the Michigan consumer confidence data and also with the housing data as well. So we're settling at around about 75 basis points, which is the initial expectation that we started the month off with. In terms of risk appetite, that faltered a little bit. There was lower yields and hopes that the Fed would be able to take a slightly less aggressive stance, and that underpinned risk on Monday. US equities, however, failed to hold on to the gains yesterday, and there were small losses posted, but pretty flat all in all, to be honest. Moving on to the Bank of England, the external member Saunders warned that price pressures could be harder to stop than the bank's central forecast due to a declining potential growth rate. He added that he thought that the tightening cycle still had some way to go and it was plausible that rates could increase to at least 2%. He also added that the cost of tightening too slowly was probably a higher risk and something that we need to keep in mind. The rhetoric remained broadly hawkish, although the overall impact was relatively limited, given that Saunders has been consistently hawkish pretty much throughout. We had some jobs numbers out from the UK today. That recorded a larger than expected employment increase for June, but there was a weaker than expected figure for the headline average earnings, with the year-on-year increase at 6.2%. From 6.8% previously. So what does that mean for all the charts and the price action for the day ahead? Well, let's take a quick look, shall we? Starting off with the dollar index. As mentioned previously, pretty much the number one asset out there at the moment, and continues to trade in a pretty decent uptrend, although there may be some cracks starting to appear. We saw the dollar index rally into a significant resistance at 108.74, as highlighted here by this red line. Also the upper end of a short-term bullish channel. This is a daily chart we have on the screen here. So we posted an engulfing candle on the 15th of July, that was Friday, and we saw further losses yesterday, and again we're on the back foot today, down by 0.2% as things stand. So it looks as though we're in a minor correction with the US dollar and potentially got scope to move back to the lower end of this channel on a previous area of resistance, which should now act as support, which is coming in at 105.78. So we'll be looking to see what sort of reaction we get there and whether or not the appetite for the US dollar is likely to remain strong. So of course that's going to dictate pretty much everything else in the currency space. So if we take a look at euro US dollar, really nice move off of the parity level, which we discussed in previous videos. Again, no real technical level here at parity, but appears to have been well defended by the bulls, and we've seen, as things stand, 3 consecutive green candles. Obviously a long way to go on today's session, but already on the front foot, up by 0.35%. So looking pretty good as things stand. Potential here for a short-term bottom. If we take a look at the intraday charts, just bring up the hourly chart here. Nice bit of rounding price formation, as you can see here, taking shape on the hourly chart. So maybe some scope for a bit of a move to the upside. If we take a look at this kind of level here as being a resistance, we broke through that quite nicely. And we've seen a decent pullback into that level, and that's attracted fresh buying as a result. So potential here for a decent bottom pattern. We could even look at these levels here to form maybe some sort of inverse head and shoulders pattern, which would indicate higher prices on the euro US dollar in the short term. Not convinced it's got enough to or done enough to be a real sort of turnaround in the larger scheme of things, but we could see easily a rally into this level here, which is 1.0346, and that would probably line up with this downtrend as well. So that'll be an interesting level to see if we can get euro US dollar up to there. Taking a look at cable, not as impressive, still looks pretty bearish overall. We have found some support down here at 117.60-ish. I'd be looking really for a break, probably of some sort of trend here in the short term, to indicate that we're going to get some sort of correction to the upside. Not really convinced we've seen enough yet, and that's a little bit messy there, to be honest. So probably need to do a better job of drawing that up. Let's just go by the highs from that level there. And introduce that. So yeah, we've got 3 touch points there. 1, 2, 3. If we can get a break above the high that we posted yesterday, which comes in at 120.33, then that may indicate that we're about to get a little bit of a turnaround on cable, somewhere up to that kind of region, maybe 126.66. Potentially on offer. So we are seeing the Aussie currencies and the New Zealand dollar currencies looking pretty robust as well. Aussie CAD, some sort of rounding bottom potentially taking shape here. If we can see a break of this downtrend here and take out this yellow line of resistance at 88.83, that may indicate that we're about to see some higher prices there. Taking a look at Aussie Swiss again. Seems to have found some support at 78.6% fib level. Seems to be some rounding sort of price action forming here. If we can take out this level of resistance here, so these previous lows and that high from there, which comes in around 67.02, then that may indicate we're about to see a move to the upside. Aussie yen has been a favourite just because obviously yen continues to be very weak. We've seen a nice breakout of this triangle pattern to the upside, and technically that's played out quite nicely and continues to look quite strong and robust, already up by over 0.5% today. And if we take a look at Aussie dollar, we can see quite similar to really what we saw euro US dollar. We've fallen into some support, and we are moving steadily higher. 3 consecutive green candles as things stand, and again potential for maybe a bit of a rounded bottom in the short term that would trigger some further gains. It's a similar situation with the New Zealand dollar currencies. Again, is this some sort of rounding price action ready for a move to the upside? It's got a fair amount to do before we can get too excited, but a move above 80.57 could trigger further upside. And let's have a look if anything else looks quite interesting. New Zealand dollar versus the US dollar, it overshot a 61.8% fib level, but potentially an ending wedge formation here. This candle, this bullish hammer candle that formed on the 14th of July, adding a bit more conviction to this potential idea. Not a great session yesterday, but certainly on the front foot today, up by 0.7%. This ending wedge may indicate they're about to see some sort of correction take shape. And although it's quite early, maybe what we're seeing here is the early stages of some sort of bottom pattern, which would play out something like that. So we've got the left shoulder here, potentially a head here. We'll have to wait and see. Very early stages, but maybe some indication that we are about to see some bottoming price action in some of the riskier assets in the FX space. So let's move it on to cryptocurrencies. I was really excited about what we were seeing yesterday with Bitcoin because it looked as though it was breaking out of this triangle pattern, this bottom type pattern to the upside. We did close above this resistance that I've got at 21,866. And so far today, we've seen a pullback pretty much directly into what we're hoping is now a support level. So that could be a really good opportunity for the bulls to consider getting long today. In fact, I may even look at that for my gun to the head challenge in a little while because technically we've seen a breakout. We've got the pullback right now. We're into that level. And if risk appetite is going to stick around for a little while, then this could be a pretty good area to consider buying. In terms of upside targets, we've got this measured move of this bottom pattern, this bottom triangle that comes in around 26,137. So ample risk reward really from an intraday perspective. If we were to buy at current levels with a fairly tight stop, I'd probably get it underneath the lows of the bullish candle that we posted yesterday. So we're looking for about 3.3R on that one for the first target, and the second target is up at this 161.8% extension of this bottom move, which comes in at 28,600 roughly, which gives us around 5R. So maybe one to keep an eye on today. Ethereum has actually outperformed, decent break from this bottom pattern. So this is what we hope to see from Bitcoin if this bottom pattern is to play out. So we've got a triangle. We've seen a breakout above the resistance, been pretty punchy. We saw a decent move higher, a little bit of a pullback, and then a roar to the upside. And that's pretty close to that measure move target already, actually, at 1682. Just coming up just shy of that so far today. We've got an extended move up to 1930 as a potential upside target on Ethereum. So seems to be some interest in these cryptocurrencies from the bullish side of things, based on how heavily they've been beaten up over the last few months or so. So maybe some relief there to consider. Moving on to commodities, let's take a look at Brent. Decent day again yesterday, really strong green candle. Still a bit wary about this head and shoulders top pattern that we've highlighted on the daily chart. It's not the cleanest because obviously we've got this price action over here on the left, but we have seen a break of trend. We have seen a failure of the reverse side of that trend line and the potential formation of a top pattern. But we did see on the 14th of July, a pretty strong turnaround, and that's been backed up by further gains. So we're approaching a pretty key area, really. 104.50 to kind of 107.50, I think, would be the area that I'd be considering speculating on the short side, so into that kind of region there. If we can break above that, then it may suggest that the uptrend is ready to resume on oil, which won't be great news for us consumers on our energy prices. Take a look at WTI, big double top here highlighted. Looked as though we were going to get a breakdown, but we closed with a bullish hammer on Friday, and prices have continued moving higher 3 consecutive days so far. Really strong area of support here, as we can see. That's done a pretty decent job. So we need to see if the bulls have the appetite to continue moving this higher. There is an uptrend resistance, sorry, a downtrend resistance line to consider. Touch point there, and potentially here. So we'll wait and see what sort of reaction we get in that zone. But I'd potentially be looking for upside to be capped around 103 on WTI and expecting lower prices. But this double top hasn't completed, so it is only a potential double top at this point. So keep an eye on that for now. Looking at gold, really nothing going on here. I know it's a favourite amongst many traders, but last 2 days, 3 days of price action have been really poor. No volatility in this whatsoever. Maybe it is starting to stall. You would have thought, given the pullback that we've seen in the dollar index, that would have supported gold, but it really hasn't done an awful lot. So we've got a 61.8% fib level to consider at 1687. We've just come up shy of that as things stand. We did break below this swing low that was posted back in September 21, and that is now acting as a resistance on the reverse side. So it looks as though we're going to be trapped in a fairly tight range with this at the minute. So maybe allocate your resources elsewhere rather than trying to wait for gold to wake up. Looking at silver, that overshot a decent 61.8% fib level and still remains really around it or below it. So again, nothing too convincing on this. So we need to see more evidence of a turnaround, some sort of big bullish candle, or some sort of formation of a bottom to get too excited about this. So for now, probably worthwhile leaving these precious metals alone. Moving on to the indices then, let's take a look at the Aussie, because we've seen on the currency side that we've seen a little bit of a pickup, potential for some bottom patterns emerging. This is very similar to actually what we've seen on Bitcoin, in that we've got this sort of triangle bottom potentially forming. We've got a resistance at 67.55 that we need to overcome. We had a look here on the 28th of June, couldn't hold on to it. Looks as though we may be about to retest that level once more. So if we can get a break here, then that may trigger a further move to the upside, only probably in a corrective manner. And I'd be looking maybe for a move into this kind of region here temporarily to see what sort of reaction we get and whether or not there's any resistance being formed by the bears. Let's take a look at DAX. That had a decent move off of support over the last couple of sessions. So you can see here this swing low from March doing a really good job at holding the prices up. Posted a decent green candle on Friday. Yesterday, we had a little bit of a look above this resistance at 13,022, but sold off into the close to form a bit of a shooting star candle. But we're higher again today, only 0.16% as things stand. If we can get a decisive break above this level, then maybe what we've got here is a very short-term double bottom pattern. And that would be pretty encouraging for the bulls in the very short term. Again, I'm not sure how much upside these markets have got because, you know, overall things still don't feel particularly great. But if we can get a break here, let's just try and set up a measured move target. So we do that by measuring the low of the proposed double bottom and project that higher. We could see prices head up to around 13,666. So from a risk reward perspective, that may be something that traders want to consider. Obviously, massive level of resistance up here. So potential for the price to even range between this, which is a fairly large range, but would provide some pretty decent opportunities in the short term for traders to consider. Let's move on to NASDAQ now. Again, this triangle pattern, which we've seen in other markets, we need to see a breakout above 12,225 to get too excited about this. It's not happened yet. Yesterday, we did see some encouragement early on, but that faded and the sellers stepped back in. So we need to get above this 12,225 level to expect to see higher prices. On the downside, if this triangle breaks, I mean, typically when you see these sort of triangles, they can be continuation patterns, and you'd expect prices to move lower in line with the dominant trend, which in this instance is lower. If that does play out and we see a break to the downside of this triangle, then the first target we'd be looking for is 10,500, which is the 61.8% Fibonacci retracement level of the entire move that has taken place over the last couple of years. So from those pandemic lows to the highs that we posted in November last year. S&P 500, again, triangle pattern, but big head and shoulders top pattern still looming over the price action, still got a fair amount to do. It hasn't really got close to challenging this 39.46 level to complete that triangle pattern. Again, the chances are that we may break to the downside in line with the dominant trend, and if that does occur, we're looking for a move down to 3,500 on the S&P, potentially as low as 3,333, which is the measured move target of this head and shoulders top. Going to finish off with the FTSE. Again, terrible market at the minute, not really a lot happening, really range bound, really choppy as well. As you can see, the ranges that we're seeing, this is a daily chart, even if we're posting dojis, have been quite big, but we're not actually going anywhere. We saw a decent move to the upside yesterday, which faded. We're still trapped below this 50% or the reverse side of this 50% fib level. Really not a great market at the minute if you are a fairly active trader. So do be careful. It looks pretty range bound, and I can't really see that changing anytime soon. Lots of influencing factors on the FTSE 100, obviously linked to the dollar quite heavily, because a lot of the constituents within the index generate revenue in dollars. We've obviously got oil stocks in there, we've got mining stocks in there, all of which, you know, are linked to the US dollar and the fortunes of commodities as well. So that all having a big impact and keeping the market in a pretty sort of flat to sort of range bound effect at the minute. So that is that for the roundup. I'm not going to go into any stocks because usually Jamie does that, and simply don't have the time to run through it at the moment. But if anybody has anything they're looking at, please feel free to add it up to the comments. So I'm going to take this now to the gun to the head trades. So this is where, when I'm joined by obviously my colleagues, we go through a couple of trade ideas that we feel could work out between now and the close of play today. And we round off the close of play at 9 p.m. UK time. We close off the ideas, and hopefully they're on side by that time. Each of the ideas that we publish have a 2-to-1 or better risk reward ratio. All of them have a stop as well, and a target, which is obviously very important. And we make note of all these trades as well. So if anybody wants to check them out, you can do so. You'll see them on our TradingView profile here. So yesterday, I like the look of a potential double top forming on the short-term charts on dollar Swiss. Look to be all lining up nicely, but technical analysis isn't foolproof. In this instance, we did see an initial move to the downside, but then it ended up being stopped out. So quite volatile and choppy stuff at the minute. potentially worth another go actually if it can break down below the lows that we posted yesterday, as I still like the formation. But yeah, sadly that one didn't work out, and I think Jamie was also stopped out on his silver trade as well. No, he wasn't. He was on side, so well done to him. That's looking pretty good still. So yeah, nice win there for Jamie on silver yesterday. So today, what are we going to look at? Well, as you notice, I looked at Bitcoin a moment ago, and that looked quite interesting. So let's just refresh our memory on that one. So we're down by 2.6% as things stand. This is the chart that was getting my attention. Triangle pattern, as we can see here. Nice horizontal level, broke out of that, pull back into that level today. So is that level going to hold? That's what I'm looking for. Technically, you know, if we're looking for support and resistance to work as we expect, then you'd think that this pullback to this support level is going to hold and we can get a trade on. So I'm going to be looking to buy Bitcoin today. Let's take a look at the intraday charts just to try and finesse the entry a little bit. So from what I can see here, just eyeballing this chart, we look to have a decent channel maybe forming here. Let's see if there's any value in that. Yeah, that's worked quite nicely. So we've seen a pullback into those support levels. Let's just get something drawn on in the shorter term. So again, you know, just eyeballing this based on years of experience at staring at charts. So I thought there was a line in there, and there is. That's at 21,582. So let's use that as our reference. I'm going to buy at the current price of 21,830. And I'm going to have a stop loss below this low here that we posted at 8 o'clock yesterday evening. So it's a 2% stop, or 474 points. That comes in at 21,354. Now I need to start looking for the upside targets here. So we look to be on the front foot. It looks as though we've got potential to start moving higher. We obviously need to take out yesterday's highs. And let me see if there's anything over here that I can look at as a reference. Let's go with this level here. So pretty punchy stuff. Looking for a big upside move there. Got to be in it to win it. So looking for a move to 24,893, which would give me a 6.5 hour return. Pretty punchy stuff. But if we can see a breakout above this high that we posted yesterday, then I see no reason why that will slow down in the short term and could really pick up a bit of momentum on the upside. So that's my trade of the day, buying Bitcoin. Good luck if you are taking a look. Okay, so day ahead, what have we got today to look forward to? So this morning we had a fair amount of data out of the UK, although it was quite mixed. Later today we've got the US housing starts, that comes out at 1:30 US time. At 4 o'clock we've got the Bank of England Governor Andrew Bailey speaking, and then tomorrow at 7 a.m. UK time we have the UK consumer prices. So this is the latest read on inflation, which will be really important and will obviously dictate what it is that the UK central bank do next with regards to monetary policy, both interest rates and tightening of the measures that have been put in place. And then on the 21st, we've got the ECB policy meeting, followed by some important PMI data out from Europe and the US. So that's it from me today. Hopefully that was useful for anybody watching. I'll be back tomorrow. It will just be me again because Jamie's off for the rest of the week. And then on Monday, Steve and Jamie will be both back and we can give you the full service and look at a lot more asset classes and go into a little bit more detail. But until then, have a great day. Stay cool if you're in the UK. And yeah, speak to you tomorrow. Goodbye.